Ines Group Berhad, we have built a strong foundation as a Malaysia-based edible bird's nest company. Our subsidiaries Mingfeng and Dynamic Transforms are among the top 10 Malaysian companies exporting raw, cleaned edible bird's nests to China, reinforcing our position as one of the leading market players in Malaysia's edible bird's nest industry. Looking ahead, we are focused on long-term growth and value creation. Our plans include manufacturing bottled bird's nest and other herbal beverages in-house, giving us greater control over quality, product development, and formulation flexibility.
In Malaysia, over the past 4 decades, Hock Soon Poultry Farm has evolved from a humble family business into a leading force in modern agriculture. Today, Hock Soon produces over 1.5 million eggs daily, with operations spanning more than 20 hectares. Every day, freshly laid eggs are transported via conveyor belts into our facility, where they pass through multiple inspection stations. Hock Soon's in-house brand, Q+, has been serving the nation for over a decade. The range includes omega, selenium, vitamin E-enriched eggs, and jumbo-sized eggs. Hock Soon Poultry Farm, nurturing quality from farm to table.
What would happen? Machines run. Operation stopped. Tables are dirty. Business halted. Store closed. Staff gone. What if you had Manforce Group? With Manforce Group, every step is handled. Every risk is managed. Every regulation met, from permits to paychecks, ensuring legal, fair, and quota compliant start. Partner with Manforce Group right from the start. Powered by Manforce Group Berhad.
Where creativity meets strategy, and where brands are built on innovation and insight. We provide a complete 360-degree marketing and sales solution, creating real-world exposure through business events, awards, and networking platforms. We then strengthen online presence through digital content, media exposure, and performance marketing. To reinforce awareness, we extend the message offline through billboards, banners, and digital out-of-home media.
KleverStock is a content-driven financial media and investor insights platform. We integrate live stream coverage, educational content, market data visualization, and AI-powered tools to support investor understanding and engagement. In the past year, we achieved significant momentum across our operations and market visibility. We delivered nearly 99% of all IPO and listing day live stream coverage, featuring executive interviews, ceremony broadcasting, and real-time market updates. We collaborated with major corporates including Foodie, Aquawalk, and many others. We also expanded partnerships with investor relations firms, trading platforms, and marketing agencies. KleverStock is now ISO certified, and our official media accreditation has been renewed, enhancing governance, access, and professional credibility. Our content performance continues to grow rapidly. We achieved over 10 million impressions across social platforms, 1.2 million unique visitors in 2025, and more than 630,000 live stream views driven by our IPO and market coverage. These results reinforce our growing influence and visibility across the financial community. We advanced our technology with Phase 2 of our AI engine, enabling smarter sentiment tracking, automated summaries, and improved market screening. Our priorities for 2025 include strengthening strategic partnerships, enhancing our IPO and corporate livestream capabilities, expanding content production, and accelerating AI-powered investor tools. We remain focused on innovation, consistency, and delivering market-relevant insights. KleverStock remains committed to growth, technology advancement, and delivering meaningful impact to our clients, partners, and audiences.
In a world powered by data, electricity is not optional, it is foundational. Every transaction, every connection, every system depends on it. Electricity sustains industries, enables digital ecosystems, and underpins modern life. Economic growth depends on stable infrastructure. Digital expansion depends on reliable power. EI power strengthens the systems that sustain both. We engineer certainty in environments where certainty is required. EI Power Berhad, powering tomorrow.
HSS Holdings Berhad, where we transform the finest bakery products into accessible delights for everyone. We combine premium quality with affordability, driving product innovation and leveraging our extensive distribution network to reach more markets, mini market, supermarket, and hypermarket. From HSS to LHMC and Kasaga, our commitment to quality, innovation, and customer satisfaction drives us forward. Join us in bringing incredible bakery products to the world. HSS, your trusted partner in bakery excellence.
Go!
Rest and go.
SRO. SRO, so you have a range clear launch.
10 CDI.
Half of the case, see processing and launch.
At Ines Group,
Good afternoon, investors. You are now on KleverStock with me, Madhavi, and I'll be serving you the midday roundup with the latest market updates from this morning up until now. Kicking it off with updates from our local bourse, caution swept through the local equity market during mid-morning trading today, prompting a broad retreat across key indices on Bursa Malaysia as market players adopted a protective wait-and-see approach. The prevailing defensive sentiment was clearly mirrored in a negative market breadth by 10:30 a.m. Declining securities took the upper hand with 345 counters finishing in the red, comfortably outpacing the 289 stocks that managed to book early gains. Meanwhile, a substantial chunk of the market remained idle, with 465 counters experiencing no price movement whatsoever. This selling pressure dragged the benchmark FBM KSCI down by 4.54 points, forcing the key index to hover at 1,678.99 as blue chip performance softened. The weakness was felt across the wider market as secondary indices also tipped into negative territory. Small cap and entrepreneurial stocks faced profit-taking, pushing the FBMAs down by 7.90 points to 4,884.95, while the comprehensive FBM Mass Index gave up 25.13 points to sit at 12,447.59. Trading activity during the initial session proceeded at a moderate pace. Total market turnover amounted to 929.351 million shares changing hands, translating to a cumulative transaction value of 361.859 million ringgit, suggesting that heavy institutional buyers are largely holding back their capital for the time being. Moving on to our local currency and foreign exchange. The Malaysian ringgit started Tuesday morning on a slightly stronger note against the US dollar as market players closely monitored the policy trajectory of the United States Federal Reserve. However, the local currency faced downward pressure against the most other major global and regional peers, finding solace only against the Japanese yen and the Thai baht. As trading commenced at 8 a.m., the ringgit nudged forward to 4.0815 or 4.0880 against the greenback, up marginally from Monday's close of 4.0825 or 4.0875. Dr. Muhammad Afzal Nizam Abdul Rashid, the chief economist at Bank Muamalat Malaysia Berhad, noted that market sentiment continues to be dictated by the Fed's next moves, adding that a steady US services sector is keeping the greenback firmly anchored. Dr. Muhammad Afzal Nizam told Bernama the U.S. Institute for Supply Management Services Index eased to 54.0 in June from 54.5 in the previous month. Despite the decline, businesses' sentiment in the services sector remained fairly resilient. He further highlighted that remarks from a key U.S. central bank officials are pointing toward prolonged elevated borrowing costs in the world's largest economy. He added, additionally, Fed Governor Christopher Waller's reaffirmation of the Fed's commitment to bringing inflation back to its 2% target suggests that interest rates could remain higher for longer, thereby supporting the US dollar. The firm dollar sentiment left the ringgit trading mostly lower against a wider basket of major currencies in the early sessions. The local note slipped against the euro, moving to 4.6696 or 4.6771 from yesterday's close of 4.6543 or 4.6640, and depreciated against the British pound to 5.4668 or 5.4755 from 5.4336 or 5.4449. Conversely, it managed to gain ground against the Japanese yen, strengthening to 2.5179 or 2.5221 from 2.5203 or 2.5257. A similar trend emerged within regional match-ups where the ringgit lost traction against most its neighbors. It weakened to 3.1593 or 3.1648 against the Singapore dollar from Monday's finish of 3.1500 or 3.1571, dipped against the Indonesian rupiah to 226.8 or 227.2 from 226.5 or 227.1, and edged down against the Philippine peso to 6.63 or 6.65 from 6.62 or 6.64. Bucking the downward regional trend, the ringgit found positive footing against the Thai baht, advancing to 12.2545 or 12.2807 from its previous close of 12.2627 or 12.2942. Now for some economic news. Maybank Investment Banking Group has revised its 2026 gross domestic product growth projection for Malaysia upward to 4.9% from a previous estimate of 4.4%, pointing to robust economic momentum. At the same time, the firm reinforced its optimistic view on the wider Southeast Asian region despite ongoing global economic headwinds. The investment bank raised its collective Asian 6 GDP growth forecast to 4.7% from 4.5%, pointing to cooling global oil prices, stabilizing tanker traffic through the strategic Strait of Hormuz, and sturdy domestic economic engines across the regional bloc. According to Maybank IBG, Malaysia's strong economic data through April and May indicates that the country is on track for another quarter of growth exceeding 5%. This performance is being driven by powerful manufacturing output, expanding net exports, higher commodity values, and an artificial intelligence-led tech boom. The firm's stated outlook for the second half of the financial year 2026 remains healthy, especially amid sustained momentum in investment approvals, particularly in technology, renewable energy, industrial, real estate, infrastructure segments. Reflecting this economic strength, Maybank IBG kept its year-end target for the benchmark FBM-KSCI unchanged at 1,750 points. This valuation is underpinned by an expected corporate earnings growth of 7.5%, stable consumer spending, a strong pipeline of investment approvals, and steady buying interest from foreign funds. The firm also upgraded its stance on the technology sector, noting that local long-term growth will be heavily driven by rapid AI adoption and ongoing data center expansions. These fresh projections were released just ahead of Maybank IBG's annual flagship Invest ASEAN conference taking place in Singapore from July 7 to July 8. The high-profile two-day event is anticipated to host roughly 200 institutional investors and prime brokerage clients, managing a collective pool of $23 trillion in assets. A total of 54 corporate entities, including a major sovereign wealth fund hailing from Malaysia, Singapore, Thailand, Indonesia, the Philippines, Vietnam, and India, are participating, bringing together a combined market capitalization of $553 billion. Michelle O. Lau, the Chief Executive Officer of Maybank IBG, emphasized that the substantial turnout at the conference proves that global capital remains highly interested in Southeast Asia. He noted that the primary talking points for this year's gathering will focus heavily on regional energy transition, the shifting of global supply chains, and AI-driven digital upgrades. Now in its 13th year, the Invest Asian Conference serves as a key bridge for Maybank to link global financiers with regional businesses, offering the strategic insights needed to navigate an evolving international landscape. And we'll now take a short break, but don't go away. We'll return shortly with corporate news and developments. Welcome back to the Media Roundup. Let's continue with some corporate updates. UEM Sunrise Berhad is partnering with Axim KLCC Sdn Berhad to develop its prime 1.6-acre freehold land at the junction of Jalan Ampang and Jalan P. Ramlee in downtown Kuala Lumpur. Through a development rights arrangement, UEM Sunrise will hand over the development rights to Axim in exchange for a guaranteed 415 million ringgit payout plus a share of future profits. Hong Leong Investment Bank Research noted that this smart move allows UEM Sunrise to make money from the land without dealing with a heavy cost and risk of building the massive project itself. HRIB Research stated, against the backdrop, we view the DRA structure positively. The guaranteed entitlement represents a 29% premium to the land's net book value of 320.7 million ringgit, enabling the group to recognize a meaningful gain from the transaction. The research house said the timing is perfect because the luxury property market is recovering due to stronger foreign demand. Selling the rights now lets UEM Sunrise focus its money and energy on 5 other major high-rise projects it has planned over the next 2 years, including developments in Mont Kiara, Kelana Jaya and Kiara Bay. HLIB Research said, in our view, UEM Sunrise has effectively capitalized on improving market backdrop to unlock value from a prime but idle land bank, while preserving balance sheet flexibility for these higher priority projects. If UEM Sunrise had chosen to build a mixed-use project alone, it could have brought in nearly 2 billion ringgit in total value, but it would have required massive spending. To make it profitable, the company would have needed to attract top hotel brands and high-end retailers, while it would take too much management time and specialized effort. HLIB Research added, under the DRA, the group will receive the 450 million ringgit in stages. UEM Sunrise is expected to recognize a net gain of 66 million ringgit in financial year 2026 from this DRA, maintained by with unchanged target price 92 cents. Public Investment Bank Research agreed that the deal will strengthen UEM Sunrise's balance sheet by freeing up cash to pay down debt and fund other projects. However, Public Invest kept a neutral rating on the stock with a 60-cent target price, noting that the shares are already fairly valued. The company's stock recently traded at 63 cents, up 14.5% since the start of the year. Market experts see this idol as an early victory of UEM Sunrise's new leadership team. It shows the company is on good growth path as it also works to revive its property project in Melbourne and refresh Puteri Harbour in Johor. Up next, we have a commodities update. Oil prices rose slightly on Tuesday morning as investors looked past easing Middle East tensions to focus on a growing global supply and weak demand. Brent crude futures went up 20 cents to 0.39% to $72.29 a barrel. Since U.S. West Texas Intermediate crude increased by 29 cents or 26%, to $68.84. This smaller rebound followed a sharp drop on Monday, which had wiped out the price spikes caused by the recent conflict between the U.S. and Iran. Tim Watera, chief market analyst at KCM Trade, noted that while supply is recovering, the market remains volatile. Watera said the steps towards recovery supply have eased the immediate risk premium, but the market remains wary on putting too much faith in stability to the current truce given on the again nature of U.S.-Iran relations. Political uncertainty persists after U.S. President Donald Trump warned he would either reach a deal with Iran or finish the job, threatening military action. This came as Tehran maintained a different stance following the funeral of its former supreme leader, Ayatollah Ali Khamenei. Investors are now monitoring talks to secure shipping routes through the Strait of Hormuz. Meanwhile, oil production is growing rapidly. The United Arab Emirates boosted its output past 3.8 million barrels per day in June, its highest level since April 2020. After leaving OPEC Plus quotas in May, analysts say future price movements will depend heavily on real-world economic factors rather than just political headlines. Whatever ad we will be watching for nearly signs of demand response, particularly from China. The market has priced in a lot of positive supply news, so the next leg in oil prices will depend on whether physical reality matches the optimistic headlines. Adding to the large supply, OPEC and its allies, including Russia, agreed to raise output by another 188,000 barrels per day in August, following previous hikes in June and July. To stay competitive against this wave of new oil, Saudi Arabia announced a massive price cut. Saudi Aramco slashed its August price for its main Arab light crude to Asia by $11 a barrel and placing it at $1.50 discount against the regional benchmark. This marks the kingdom's largest single-month price cut in over 20 years. Finally, wrapping up, we have major corporate developments and the deals across Malaysia. Abu Dhabi property Berhad acquiring Wisma Uni Razak in Kuala Lumpur from Permadalan Nasional Berhad for 160 million ringgit cash in a related party transaction. WCT Holdings Berhad has secured a subcontract worth AED 836 million for a residential development project in Abu Dhabi. Carlsberg Brewery Malaysia Berhad said Japan's Sapporo Breweries will invest $643 million for a 25% stake in a new Carlsberg-led joint venture covering Southeast Asia and Hong Kong. Berjaya Property Berhad has partnered China-based Wanli Tire Co. Limited to set up a 1.3 billion ringgit automotive tire manufacturing plant in Selangor. Hibiscus Petroleum Berhad has achieved first oil at its 100% owned Teal West field in the UK North Sea. The field recorded initially daily output of about 6,000 barrels within expected start range of 4,000 to 10,000 barrels per day. Careplus Group Berhad is selling a property in Seremban for 42 million ringgit to partly fund its new energy vehicle venture. ECM Libra Group Berhad has entered into a 50-50 joint venture with TP Real Estate Holdings Private Limited involving Ormond Group, Sindrian Berhad. And that's a wrap for Midday Roundup with me, Madhavi, on KleverStock. Thank you for choosing us, investors. Stay tuned for upcoming live stream programs.